This week in the world of Alphabet, a set of blockbuster earnings was met with a surprising market reaction. The company announced it's doubling down on its artificial intelligence ambitions with a spending plan of historic proportions. But as the numbers soared, the stock stumbled, leaving investors to ask, is this a visionary leap into the future of AI or a cash burn of epic proportions? Welcome to TickerWatch News for Alphabet, Week 6, 2026. We're taking a look at the developments and market-moving news for the company behind Google. This week was all about a clash of narratives, stellar business performance versus an eye-watering forecast for future investment. Stock Snapshot. It was a volatile week for Alphabet stock. After reporting very strong fourth-quarter results on Wednesday, the share price saw a significant drop, falling from around $331 on February 5th to about $325 by the end of the week. This move pushed the stock below its 50-day moving average, a technical indicator some traders watch closely. The decline came even as the company's performance over the past year has been impressive, with the stock delivering a return of nearly 75%. The broader markets also faced pressure, with the Nasdaq and S&P 500 seeing declines as a tech sell-off rippled through Wall Street, partly fueled by concerns over the high cost of the AI arms race. Top news and headlines. The biggest story of the week was Alphabet's fourth-quarter earnings report. The company posted revenue of over $113 billion, beating analyst estimates and pushing its annual sales past $400 billion for the first time. The results were strong across the board. The Google Services segment, which includes Search and YouTube, saw its revenue climb 14%. Search itself grew by a healthy 17%, driven by what the company calls new AI use cases and record user engagement. The standout performer, however, was Google Cloud. Its revenue surged by 48% year-over-year to nearly $18 billion. The cloud division ended the year with a backlog of $240 billion, up 55% from the previous quarter, signaling very strong demand from enterprise customers, particularly for AI workloads. But the strong earnings were completely overshadowed by the company's spending plans. Alphabet announced it expects capital expenditures for 2026 to be between $175 and $185 billion. That's nearly double what it spent in 2025. This massive investment is aimed squarely at building out the infrastructure for artificial intelligence. Think data centers, servers, and custom chips. The announcement immediately raised questions among investors about the impact on near-term profitability and cash flow. In the earnings call, CEO Sundar Pichai addressed this directly, stating that the top question that keeps us up at night is having enough capacity to meet the extraordinary demand for AI. Despite the spending shock, Alphabet continues to show progress on its AI initiatives. The company's Gemini AI is being deeply integrated across its products, and the Gemini app has around 750 million monthly active users. Internally, Alphabet is using AI agents to increase efficiency, with the finance team using them to process invoices and the engineering team using AI to help write about half of its software code. In other AI-related news, the company's autonomous driving unit, Waymo, raised $16 billion in a new funding round to support its expansion into 20 additional cities. And its partnership strategy is developing as well, with Apple reportedly integrating Google's Gemini into Siri. Market reaction and investor sentiment. The market's reaction to the week's news was decidedly mixed. While Alphabet stock fell on the spending news, many Wall Street analysts remained bullish on the long-term story. Firms like Bank of America, Wedbush, and Jefferies reiterated their buy ratings, framing the heavy spending as a necessary investment to solidify a leadership position in AI and meet clear customer demand, especially in the cloud segment. The narrative from analysts suggests that while near-term spending may pressure margins, it's a strategic move from a position of financial strength. Google Cloud's rapid growth is seen as a key proof point that the investments are paying off. The overall tone is one of cautious optimism, acknowledging the execution risk of such massive spending while believing in the long-term return potential. Investor sentiment is shifting across the tech sector, moving from simply rewarding any AI-related announcement to more closely scrutinizing the return on those investments. Technical and fundamental check-in. From a technical perspective, the most notable event was Alphabet's stock dropping below its 50-day moving average. For some market watchers, this signals a potential near-term downtrend or a period of consolidation as the stock finds a new support level. The high trading volume following the earnings report indicates a significant reaction from investors. On the fundamental side, the narrative is a battle between long-term growth and short-term financial pressure. The company is trading at a premium valuation, but bulls argue it's justified by its dominance in search, the rapid expansion of Google Cloud, and its leadership in AI. Alphabet's huge cash flow and strong balance sheet provide the financial firepower to fund its ambitious spending plans. The key fundamental question is no longer if AI will be big, but how quickly Alphabet can monetize its massive infrastructure build-out to justify the cost. What to watch next week? Looking ahead, the key thing to monitor will be whether Alphabet's stock can stabilize and reclaim its 50-day moving average, or if concerns over capital expenditures continue to weigh on the price. The bull case is that investors will digest the spending plan and shift their focus back to the impressive growth in Google Cloud and the monetization of AI across the company's vast ecosystem. The bear case is that the AI spending spree narrative continues to dominate, and the stock, along with the broader tech sector, faces continued pressure as the market waits for more concrete proof of returns. The most likely scenario is continued volatility as investors balance the enormous long-term opportunity in artificial intelligence against the very real and immediate costs of building it. That's all for this week's TickerWatch news for Alphabet. Thank you for listening. Please remember, this podcast is for informational and educational purposes only and is not financial advice. Be sure to subscribe for more weekly updates and consider sharing this episode if you found it helpful. We'll be back next week with more news from the world of business and finance.